Have you ever been in a situation whereby you are trading a particular account? Today you are making profit. Let's say you make profit today, you make profit tomorrow. The next day you blow everything. It's just going up, coming down. You understand all the ups and downs. There is one thing you are actually not putting into consideration, which is risk to reward ratio. Let's say we have an account size of $10,000 and the win rate of that strategy we are using, let's bring it down to 50% win rate first, which means out of 100 trades, you lose 50, you win 50, right? So now let's take 20 trades as an example, and our strategy win rate, let's say 50%, which means you lost 10 trades and you won 10 trades. Okay, now pay attention to the risk to reward ratio part. Let's say the minimum risk to reward for this particular strategy we are using is 1:2 risk to reward, which is the minimum I want you guys to use, right? Okay, now, and the risk percentage on this particular account is the normal 1%. Everybody risks, right? Let's go to the wins. We won 10 trades, we lost 10 trades because it's 20 trading days. Now the trades you won is what? $2,000, and the trades you lost is what? $10,000. Why? Because 1% of $10,000 account is what? $100. So 100 times 10 is what? 1,000, and wins is times 2 of it because you are risking 1 to make 2. Remember the risk to reward, right? So the wins is what? 2,000, because whenever you are winning times 2 and not just 100 again, right? So now in total, you see after trading for 1 month, 20 trading days, having equal losses and equal wins, you came out with what? 10% of your account. You made what? $1,000, which is 10% of the account. And with this, you already have passed the first phase. That is, if you are trading the evaluation account or one phase account, right? Now let's bring the win rate to 40%, which means when you win, you won 8 trades and you lost 12 trades, right? That is, you even lost more than the wins, right? Okay, which sometimes it happens like that. It happens sometimes. Now let's still use the minimum risk to reward of 1:2 and the risk percentage still 1%. Okay, now you see the wins is what? Remember, when you are risking 1, you are making 2. So the wins is what? $1,600, and loss is what? 1,200. So 1,600 minus 1,200, you came out with what? $400 profit. You came out with still 4%. Now let's bring it down to 1:1. Most people might be like, I don't do 1:1. I just put my pending orders. I put my buy and sell to it's showing 1:2, 1:3. But do you actually hold that trade to the CP? That's the question you need to ask yourself. Because most people want it go in their favor and they see, because they're reaching 100, once it flashes in their favor, they see 80, 100, they close, without knowing that you are actually closing with 1:1, right? Now let's settle that matter here. Now let's say the risk win rate is what? 50%, and the minimum risk to reward here is 1:1. Yeah, calm down. Now the wins here is 10, the loss here is 10, 220 trades, right? So when it's going in your favor, remember it's 1:1, you made what? 1,000. You're risking 100 to make 100. And when it went against you, it's what? 1:1. So in total, after 20 whole month of trading, 20 trading days, you came out with what? $0 profit. You came out with break even. Thank God your account even was at break even. Now let's bring it to 40% win rate now, which means you won 8 trades, you lost 12 trades, right? So if it's going in your favor, you made 800. Remember, it's 1:1. You are still risking 1%. And when it's going against you, still 100, 12 trades, 1,200. So at the end of 20 trading days, you came out with 4% loss. Now let's top up the risk to reward to 1:3, which means you are risking 100 to make 300. It is 1:3, right? Now the win rate still 50%, and you won 10 trades, you lost 10 trades. So when it's going in your favor, you are making times 3, which is what? $3,000 profit. When it went against you, it's what? $1,000. So 3,000 minus 1,000, you came out with what? 20%, which is $2,000 profit. Risk to reward is one of the things that most traders don't really pay attention to. And with this explanation, you could see that risk to reward really matters. So guys, from henceforth, stop closing that trade so fast. Like I do say, put your SL and TP at a point whereby you know that even if this market should want to go against me, at least you should hit this point. And your stop loss, if this trade is to go against me, then it should get to this point. That is where my stop loss should be. And if you evaluate the whole setup and it's not at least 1:2, then leave the trade. It's not worth that particular risk.